just over a year now since Paul Graham handed over the reins to you at Y Combinator.
Yeah, I think about a year and a half.
What's been the best part? What's been the hardest part?
Well, I mean, it's a really fun job, right? We are, you know, we're sort of the flag bearer for this movement towards more innovation and more startups, and that's a particularly fun time to be in that place. So we've really been able to scale up the organization quite a bit, the number of startups that we're funding quite a bit, and you know, the best part is like we just get to work with the most incredible entrepreneurs all day, every day.
You've shaken things up a little bit.
A little bit.
You've increased the number of startups that YC is investing in. You've gotten into hardware, biotech. You're starting a growth fund. You've got a new fellowship. Where are you seeing the most progress? Where are you seeing the most challenge?
Well, you know, we think sort of generally that our role or our mission is to sort of increase the innovation in the world as much as we can. And we're not tied to a particular sector or stage or even startups necessarily to do that. And so we see a lot of new ways to sort of increase the innovation in the world. You know, if we can like fund 10,000 companies over the next decade with our fellowship, something like that, that'll be a big deal. If we can, you know, I think some of the stuff that's happening in biotech now is just incredible, and the rules of biotech have shifted now so now startups can win. So I think anywhere where we look and we say, you know, we can have we can bend the curve of innovation on the world, like that's something we want to do.
You're in such an interesting position because there's so much demand to get into startups from investors and so much demand from startups to get funded by YC. How do you scale YC without losing what makes it great?
Well, the thing that makes YC great is the quality of the people that we fund. It's really that simple. Like all the reasons people want to be part of YC, be part of this community of our alumni, get access to the resources that we have and the events and the things that we do. It's not because of us, it's honestly not, it's because of the strength of our alumni. And so as long as we keep funding the very best people in the world, we can scale up quite a bit. If we were to lower the bar, it would be disastrous very quickly.
So there's a lot of debate about what's going on in the funding environment right now. You've got Andreessen on the side of optimism. You've got Bill Gurley saying not so fast. I've spoken to investors who are saying we're in a bubble, it's going to pop, there's going to be down rounds, there's going to be pain. What does Sam Altman say?
Well, the people that say that every year will be right one of these years. They've been wrong the last 10. Someday they're going to be right. They're going to claim a lot of credit for it. What I say is I honestly don't care that much. There are going to be great companies formed at the top of the markets, at the bottom of the markets, and being a great startup investor is not about getting the macro right. You know, leave that to the hedge fund guys. I don't really care if the like S&P as a whole is going up or down. I care about that one single company that is the next Airbnb, the next Uber, both of which were formed in a bomb-out market. So, you know...
So you don't care if we're in a bubble?
I don't. I honestly don't. I think that like startups need to be conscious of it, and startups should not ramp up their burn to this rate where they're dependent on a crazy huge funding round. So what I care about is that startups continue to operate responsibly no matter what the financial market's going to do. But like there are going to be great companies formed this year, next year, the year after, no matter what happens to the macro. You
said recently that it was collective delusion, this talk of a bubble. You know, since then we've seen a lot more volatility in the public markets, as you say, volatility in China. Does that give you any pause?
Well, look, I myself, I'm not excited to be an investor at the price of a lot of these late-stage rounds, and I haven't been. You know, this is like, I have made fewer late-stage investments myself in the last couple of years than any period before.
Really?
So,
why?
But, because I do think a lot of these things are, like, expensive, you know. But, like, I am free to just not choose to invest. I can go on vacation for 2 years if I want. You know, so can the other investors that come on your show all the time and talk about a bubble. But if I find a great company, and I invested in Reddit last year, and I thought that even though in general everything was really high, this was like a jewel, you know, and all you have to do is get it right on the micro scale.
So why Reddit? What potential do you see there? I know you came in, you made a lot of changes, you brought in a new CEO. You
know, the company has more than 200 million unique users every month. It's growing really, really quickly. It is a place that people feel a lot of loyalty to and spend a lot of time on the internet, and it's just become, I think these user-generated communities have an incredible network effect that just gets better as they go. So I thought that was a really great investment.
So what areas do you want to double down on? What areas are you saying, I'm not going to do that right now?
Again, we're more focused on the specific great company than a particular trend or theme. We have been seeing great individual companies in energy, in biotech, machine learning, enterprise software. But honestly, like, our next great investment probably won't come from an area that's a hot theme.
You're here at TechCrunch. You spoke a lot about community and what the technology community should be doing for the rest of the community. What do you think, when you're at this early stage, how do you think startups should be thinking about this? We just saw Kickstarter, for example, reincorporated as a public benefit corporation.
Well, I think at the earliest stage, it's all a startup can do to stay alive. I remember well from my own startup how you really don't have time to think about anything else. So I think at the early stage, startups should just try to figure out a great product that users really love. Once that's working, yes, then I do think it's important to think about how to be part of driving this community forward in a positive way.
Now, Y Combinator obviously has been behind some of the greatest companies, private companies right now, Airbnb, Dropbox, Stripe. The criticism is that, well, take those out, what are you left with everything else? What do you think about YC's batting average?
Well, I mean, sure, you could say if you take out all of someone's winners, then what are you left with? That's true. And startups in particular, the reason that you can be so founder-friendly and so benevolent as a startup investor is that only your winners matter. I forget if it's 8 or 9, but we've now funded $8 or $9 billion+ companies. We fund these companies at the stage of 2 or 3 people and a prototype, maybe a few users. And so out of the 960 companies we've already funded, let's say 8 are already worth $1 billion or more, and half the companies we funded have been in the last 2.5 years. I think that is an incredible batting average. I'm delighted with it.